Brace yourselves. China's real estate empire is shaking on the edge of collapse. It is sending shockwaves through the world economy. We'll explore why things are going wrong, from too much debt and wild buying to government actions. Let's uncover how this mess is making it hard for the country to bounce back. Keep watching until the end. You'll learn how China's property mess can shake international markets. China's property market and the economy. China's real estate industry has been important for the country's economy since the 1980s when the markets opened up. It contributes between 17 to 29% of the GDP, depending on the industries included. In 2020, direct investments in real estate reached $1.18 trillion, which is 7.4% of the GDP. The construction sector, which as we know is based on real estate, and it provided $1.15 trillion, which is 7.2% of that year's GDP. This was according to data from the National Bureau of Statistics. Real estate made up more than half of all fixed asset investments in China last year. Over a quarter of that went towards developing new properties. Even though real estate doesn't use a lot of people, it still has a big impact on jobs. Many big companies, banks, and construction businesses depend on the real estate market. At its highest point in 2020, over 62 million people worked in construction. These include industries like wholesale and retail. They are dependent on real estate holdings, ownership, and distribution, through which the number of people whose lives are dependent on the real estate sector rises even further. Who are the key players and stakeholders in China's property market? China's property market affects many parts of society like homeowners and local governments, which make it complicated. China has one of the highest rates of people owning homes in the world, at 90% in 2020. This is because people see property as a way to have financial security and stability. It is also part of the culture, especially for men who need a home to get married. Owning a home is seen as a sign of being middle class in many places. Buying a home is also seen as a good investment. This has caused property prices to go up in the past 20 years, with the average price being over $1,571 per square meter in 2020. In China, many people have most of their money invested in property. Up to 70% of a household's wealth can be in property. Because house prices keep going up, people think it's a good way to make money. There's no property tax in China, so it's easy for families and individuals to buy more homes and hope the prices keep going up. Some of the biggest businesses in China are real estate developers. These businesses made big profits as a result of China's recent real estate boom. The sales of commercial real estate increased by 21.8%, from about $914 billion in 2011 to $2.7 trillion in 2020. And this is according to data from the NBS. Most of the new constructions made by real estate developers are for residential purposes. Property developers created 16.4 trillion square meters of new houses in 2020. This made up almost 73% of all new construction. Bank loans provide for a big share of the finance for real estate developers. As a result, the housing market and the financial sector are connected. Although this is a worldwide case, it is most present in China. This is where real estate loans made up 27.4% of all loans issued in 2020. China Construction Bank, CITIC Bank, and Bank of China are a few of the big state businesses in China. They have exposure to the real estate sector. This puts the banking sector at a lot of risk from real estate market changes. There are many worries about possible financial issues from debt problems. To understand the Chinese real estate market, we must also know how the government works with it. Understanding local governments is important. The Chinese government owns all the land in cities. They let people use it for up to 70 years. After that, they can renew the lease. Companies and people can buy the buildings on the land and own them. Selling land brings in a lot of money for the government. This is especially true for local governments. They use this money to invest in public facilities to create jobs and improve the local economy. This makes them rely even more on selling land. Why is China's property market in crisis? China made choices that caused problems with property. They made a plan called 3 Red Lines in August 2020 to make a big property bubble go away. This plan was meant to help the economy not rely too much on real estate and to stop people from buying houses to make money. To get money from banks, developers had to follow strict rules about how much debt they had. They could only have as much debt as they had equity. Some developers in China borrowed too much money and broke the rules. This made it hard for the whole industry to borrow money, which caused a big problem. Two big companies, Evergrande and Kaisa Group Holdings, couldn't pay their bills in December. Houses in China are worth less than they were a year ago, and the prices keep going down. Gabriel Wildow from Teneo says China is having a crisis because of its policies. Since then, the sector's problems have gotten worse. Due to this, cash-strapped developers have battled to finish projects on time. Earlier this year, demonstrations happened. These are the people who want to buy property before it is for sale in Xinjiang. Now, these demonstrations have spread to about 100 cities. They also involve around 300 groups of people who own homes. Deutsche Bank says that the boycotts have affected mortgages. Those are worth 1.8 to 2 trillion Chinese yuan. This is around $270 billion to $300 billion, and this is about 5% of all mortgages. Tommy Wu is the main economist at Oxford Economics. He says that property developers don't have enough money. It affects their ability to keep working on their projects. This could be because they have to pay back debts, as not enough people are buying houses or they're not using their money. He further said that fixing this issue will restore homebuyers' faith in developers, support housing sales, and subsequently strengthen developers' financial position. Sometimes a buyer's money may not be enough to finish building their property. This is happening a lot now. It is because many developers don't have enough money they need to finish their projects. Also because there is not enough money in the industry. Due to this, many projects have stopped until more money becomes available. How is China tackling the property market crisis? The government is trying to help the industry and local governments by lowering pressure. They are not giving money to Evergrande and other real estate companies. To help developers pay back their loans, the government has made a plan. On January 6, 2022, Galianche, a Chinese news outlet, reported something big. The government told big real estate companies they could remove merger and acquisition loans from the calculation of debt. They can also increase their debt level by 5%. This might add some money to the industry, but it won't fix everything. The government wants the market to deal with debt, so property companies will still feel stressed. The government is helping local governments by allowing them to issue more special purpose bonds or SPBs. This is to make up for the decrease in land sales. Before, local governments couldn't borrow money, and because of which, they used LGFVs instead. But in 2015, the government started letting local governments issue SPBs to get more money and reduce their debt from LGFVs. Now, the Ministry of Finance has given local governments $230 billion to spend on infrastructure in the first quarter of 2022, and this is to help the economy. SPBs may not solve liquidity problems quickly. The government only allows them to fund projects that can make money and pay back the bonds. Local governments didn't issue many SPBs in 2021 because there weren't enough profitable projects. They were told to issue more before the year ended. One way to stop people from buying homes just to make money is to introduce a property tax. This tax would apply to homes that people live in. In August 2021, President Xi Jinping said that some cities in China will try out this tax. This is part of a plan to make sure everyone in China has a fair share of wealth. Some people think that owning more than one home makes the gap between rich and poor bigger. The property tax would give local governments more money to use. They wouldn't have to rely so much on selling land or borrowing money. But some people are not sure if the property tax will bring in enough money to replace what the government gets from selling land. In places where there is already a property tax, the money from selling land is still much more than the money from the tax. So what's next for China's property market? China's property market will depend on the government's policies. The PBOC predicts that investment in the property sector will grow between 2.5 and 5.5% in the future. But this is lower than the 7% growth seen in 2020. UBS suggests that the government could install policies. These could include loosening restrictions on housing loans, relaxing financing restrictions for developers, and furthermore, adjusting land transfer policies and building more public rental housing. The government might make it easier for local governments to spend money on infrastructure, but they haven't said for sure. Banks might also make it easier for people to get mortgages, which could help sell more houses. The government doesn't want the property market to cause too much debt and hurt the economy. They might let some big property developers lose money to fix the problem. The government wants to rely less on the property market for money. This is so they might not worry as much if the market gets hurt. Experts predict that the housing market in China will improve this year. Additionally, the government can use their land as collateral to borrow money for infrastructure projects. This will help boost the economy. Banks can feel secure knowing that the value of the land won't go down. Thanks for watching, and we'll see you again soon. And make sure to watch this next video.